The biggest difference is that everything that's on the platform is converted and held as a US Treasury-backed stablecoin.
That's Ryan Bozarth, CEO and founder of Dakota, a modern banking platform powered by stablecoins. Before founding Dakota, Ryan was the CEO of Coinbase Custody and has held key product leadership positions in companies like Anchorage, Airbnb, and Square. In this episode, we dive into Ryan's entrepreneurial journey, the challenges and nuances of building stablecoin-backed products like Dakota, and the early momentum of the platform, which just opened for general availability last week. Here's our episode with Ryan Bozarth.
Season 1 of Stable-Minded is brought to you by Layer 1, powered by BVNK. BVNK has been at the forefront of stablecoin payments for years, and Layer 1 is their latest innovation. Designed for businesses ready to harness the power of stablecoins, Layer 1 is self-custodial, global, and takes the hassle out of managing payments across multiple chains. It's the same technology BVNK uses to run their own operations that they've been developing in-house for years. Next season, we sit down with Johannes Kask, Managing Director of Layer 1, to talk more about it. So stay tuned until then.
All right, let's get into it. Ryan, how we doing?
Good, man. How are you?
I'm so excited to be doing this. I really appreciate the fact that you've, especially on the first season of this, haven't done this before, that you would trust and just dive right in. So really grateful for you. There's a lot to talk about.
Yeah, 100%.
The first season of this show is called Rising Stars, Secretly Incredible Stablecoin Founders. And what I'd love to do is spend a good amount of the time talking about your early background and just the story of you personally as a founder. I think to be able to do what you do now, which is start, lead, and grow a company like Dakota, I just think I'd love to start there, and then we can pivot into Dakota, how you guys are doing things technically, and get into more of the product. But we'd love to start there, if that's okay with you.
Sounds perfect.
So currently, what are you working on? And give us a high-level intro of Dakota and your current role there before we get too deep.
So, co-founder and CEO of Dakota. Dakota is a crypto-powered neobank for businesses. We take business banking and make it globally accessible to folks. We make it easy to accept and send out US dollars. The biggest difference is that everything that's on the platform is converted and held as a US Treasury-backed stablecoin, which allows us to inherit a lot of the properties of crypto, things like transparency and verifiability, your ability to retain ownership, assets move around the world much faster, and you have better access to yield.
It's awesome. And where are you at in the journey of that? How long have you been doing this?
Yep. We've been building for coming up on 2 years. We are currently in a limited access where folks can come up and request access to the platform, and we're onboarding new cohorts of teams on a weekly basis, and we're getting ready for general availability here in the next couple of weeks.
I'm lucky to be, I think, a part of that early access group. As I was for Stable Studios, our business, I was thinking about where are we going to bank our business and hold our assets, and I'm excited. We aren't fully there yet, but we're in the KYB flow and we're getting going. So excited to be a user of the platform soon.
Very excited to have you on. We're here shortly.
Cool, man. All right, well, let's dive into some background a little bit. When did you know you wanted to be a founder? Was this something that you felt this type of work drawn into since you were a young guy, or when did you know that's something you wanted?
So I put myself in the category of people who, even when we were really young, really enjoyed business and building things, and it wasn't necessarily for a lot of the financial outcome or anything else. It's just I happened to be able to have the latitude to do what I would describe as really fun projects, whether it was, selling T-shirts out of the back of your car or things along those lines. And you always ended up doing them with friends. And it was just like one of those experiences that I remember being in those moments, whether you're at a trade show or at the parking lot or wherever it was, and just kind of reflecting and being like, this is great. This is kind of what I want to do. Why wouldn't I keep doing this if I can kind of work with people I really like, bring interesting things into the world? This is the kind of path for me. And so I think from those early days, that was always something that was very compelling, just for those aspects, to be able to work with people that you really enjoyed and work on something that you really enjoyed. And so from, I'd say, those companies that basically started around a high school era going forward, it was always something that was a North Star for me.
Okay. So merch. So you were doing some merchandise stuff in high school. What was, it's funny. I think that's pretty common, starting with something that's fairly straightforward, but you can wrap your head around, build a little commercial model around it. What was your role in that? Sounds like you were doing it with some buddies. What was your specific role there?
Yeah. So there was 3 of us, and it is not a a great business or a glamorous business by any means. It's definitely done by a lot of folks, but the three of us together kind of ran it, where we would go through the entire process of kind of working with designers to design t-shirts, hats, sweatshirts, things along those lines. This is 15, maybe 16 in the later years, going through and trying to find suppliers and people that will trust you and partners to kind of go through actually everything from the cut and sew process to silk screening to distribution and talking to retailers and all that stuff. And looking back on that, I'm sure I got some interesting looks from folks at that age. But it was a lot of fun. And so the three of us didn't have, I'd say, anything kind of formalized, but we kind of ran the company together. We all tried to find suppliers and partners where we could. We all oftentimes together would go through and do things like supply chain or cut and sew work.
So you took this really seriously. This wasn't just like we're going to throw some logos on a t-shirt and sell them. Like, sounds like how big was this operation? Like, how big did it get and how did it eventually close?
It started in high school. We ran it for a couple years. We were probably in a handful of retailers from Southern California, so throughout Orange County and LA, but it was never a large operation, never something where it was like a significant moneymaker or anything like that. Any dollars we got from selling the merch went right back into an order for the next t-shirt or sweater or whatever it might have been. And so it's one of those exercises where you probably broke even or maybe even lost, $1,000 here or there, but basically an exercise and just the fun of starting something. And then the three of us ended up going to college, spending up time on other things, and we wound down the business as something that wasn't really make sense to maintain. It wasn't on a trajectory that was going to be a big business. And so it was more of a project than anything else, and kind of looking back on just a really fun way to spend a few years.
Yeah. There's something really empowering about being a young person and being able to know that you can create capital on your own and be able to have that sort of entrepreneurial muscle start as a young person. I think there's something really empowering about that. Did that sort of theme as you go to college, you're in your early career, was that something you continued to flex? Or I know you had some pretty significant roles in some bigger technology companies earlier in your career. Were you always sort of tinkering around, or what was that balance like? I find that people who have that itch sort of have a hard time not scratching it.
Yeah, 100%. And I think along the lines of being young, I think people often underestimate just how many chances or breaks you'll get as being a young person. I think a lot of the people that we worked with, especially at that age, are happy to kind of just extend a hand and help out in some ways because they just love the next generation just trying to do something and make something. And so you get a lot of latitude in that regard. In terms of myself, I think there's always things that I would describe as kind of projects that are happening. I probably had countless, definitely probably a dozen or more exercises and things that maybe could have been businesses that were ways for me to kind of flex some of that and just kind of enjoy that. So everything from kind of writing business guides when I was probably far too young to be writing a guide for anybody, but it was a way to say, hey, like there's an easy way to distribute digital content now. We had learned a lot about working with small businesses at places like Square. And so we kind of wrote guides that would help small business owners, everything from kind of marketing to finances to sales. And before that, kind of just always having something that you might want to kind of see in the world and therefore work on, countless ideas in which they were kind of left in either some kind of idea state or some state of development, which ended up being the motivation to learn how to design, learn how to code and do all these things just because you would have something and you want to be able to, on your own, without any kind of other dependency, be able to at least make some progress on it.
So you were doing these like small business guides, you were creating content, you were putting things out there targeted at small businesses. Was this how you originally heard about Square? You were there pretty early. I mean, I was at Square, I think a few years after you on the sales side of things, but when did you first join that business? Because you were there at a pretty pivotal time. Tell us about that, like that journey.
Yeah, I joined Square in 2013. I had probably around 300 or 400 people at the time. So it was out of those kind of early startup days, but still relatively small, especially when you compare it to kind of a post-IPO company. Really amazing experience. And that was my first time kind of getting to it brought me to San Francisco, getting to see the kind of the true tech scene. I had worked at places like Sony before that, but the kind of view and approach to technology is very different than what you see at these kind of like early stage startups. And so that was really kind of what I would consider the kind of indoctrination into something like kind of what we do today and how we build and product development, how we think about the process. And that also was really what got me into on a purely kind of cultural level the kind of appreciation, understanding of small business owners, and really kind of the recognition and wanting to work with folks like that going forward. So as you mentioned, business guides, a lot of the work after that has been along that vein of identifying that that's something that really resonated with me there during that period for a number of reasons, but top of which is just being able to help people that are branching out and trying to do something on their own in the same way that people were helping me in the early days of that business, and kind of being able to support them in some way. But that's definitely been a theme in my career since then, and I thank Square for that.
Yeah, I do too. Square does a really good job and still does of really, really putting the microscope on the customer and being completely obsessed with who they're building for and for what reason. I want to, any other early career stuff for you, like when you think about the journey of, you've worked at some incredible places before starting Dakota, some teams that I would argue, even in the traditional software sense or the crypto sense, have built some really groundbreaking things in the world of finance. When you think about specific roles or moments or things that stick out to you now as you're building this on your own, what roles or opportunities or things that you were up to do you find the most pivotal in that 10-year or so journey? I know that's sort of a hard question. There's probably a lot going into that moment for you, but when you think back on that season, what tends to stick out and make you grateful?
I'll start with Square, and we can move forward from there. But Square was an example of, as you mentioned, there was like this intense focus on the customer. I think something that Square did really well was that it would look out at the playing field and say, hey, this doesn't feel the way that I want it to feel. It doesn't feel this playing field is level. It felt like the big players had advantages and things that small business owners just quite frankly didn't. And they kind of were able to instill that in a lot of us in the early days as employees, as part of that culture and part of that mission. And that really resonated with me there. And it's something that when I think about today or later in my career, just kind of culture building and finding things that are really important, that's been an incredible guiding light as a company that I think did it really, really well. And it came out in a number of ways. And one ways it did was just the folks that would be the kind of show, don't tell was one of those cultural pillars in the early day where you kind of really think about not necessarily saying what we do, but actually going and doing it. I think that came out in those brand exercises of highlighting merchants and business owners as opposed to putting Square front and center. But it came on in dozens of other ways as well, big and small. If I fast forward to something like Airbnb, this story some folks might know, but is pretty famous for having these Snow White storyboards, which means that in the office, we had a series of storyboards that are done by an animator and that had the entire customer journey at Airbnb. So everyone that from the guests going to search on the website for a place to stay, to arriving for you at the house or the apartment or the treehouse for the first time. And each one of those stories had a green, yellow, or red color associated with it. And that was meant to grade or rate what the experience was like. And so green was that it was going pretty well. Red was this is a pretty rough part of the user experience. And so that was one of those areas where, for me, it was a great example of taking something that we all say, which everyone says that they're customer focused, that's what they care about, but by putting it front and center, putting it in the office, and actually going to the work of creating the storyboards in a level of detail and rating them was a great example of like, this is a great way to kind of pull that out of people and be able to actually do a lot of that work. And so in that example, that's quite literally something we brought to Dakota. We do something very similar. But throughout my career, I got a chance to learn from these experiences and from these amazing companies and kind of be able to, at times when we're doing it well, kind of pull what's really worked and use that going forward. I'll say the last one, both Anchorage and Coinbase, I think did a really good job, particularly in crypto, of building really strong brands. If you think of someone like Anchorage, especially in the early days, they spent a lot of time kind of carving out a brand that was really about having a lot of trust from what oftentimes were large institutions with financial assets. And so being able to come on the scene, develop that trust, and develop that as part of their brand was incredibly powerful and a big driver of that business. Coinbase, you'll say the same thing for a lot of how we think about that exchange today and the kind of trust they built up as a marquee player in the space. I think most people would describe them within crypto as kind of having the kind of most trust built up for a single business or institution. And those were incredibly important part of those brand stories. And so when I think about something like brand building, I'll look to those experiences and we'll do our best to kind of pull from what we saw there, because these are just amazing operators and teams, and being able to work with them gives us a chance to really ideally pull that into our own business and our own work going forward, as it does everybody else.
I love how you can articulate all of those things in a way that's, pulling your experiences from everything you just said, like with Square, the obsession with the customer, the pain that they're going through. What does the incumbent journey look like that a merchant would face to get started taking payments? How can you solve for that? The Cinderella example of with Dakota, how you're now taking that and applying that to the journey, the brand. I mean, when I think about Dakota and at least my very short journey, even getting started with it, I'm curious, like I have felt that the onboarding journey, which, candidly, as someone who's also been at Coinbase, can be very painful to get started with a institutional account with a business. I was on the other side of that, selling Coinbase institutional to customers, and that can be a very long, drawn out. I'm thinking about the Cinderella, whiteboard there, and that's probably a red. Like typically the onboarding journey, I'm kind of guessing. So when you think about Dakota now and you're whiteboarding that Cinderella story, what are some of the common pain points that you're looking to solve? What are you really focused on that are typical negative experiences like that?
Yeah. I think one is, as you called out, onboarding is maybe the kind of classic example when it comes to crypto, especially institutional products in crypto, where it historically has taken a very long time. It can take months to get up and running. The kind of amount of documents requested and compliance can sometimes feel overbearing, or just quite frankly, much more than most folks are used to. And we talk a lot about kind of what we've also learned from the past and what's kind of gone well. You also try to pick up and try to kind of avoid what the mistakes you may have made in the past. And so one thing that we did with Dakota intentionally from day one was to spend a lot of that time, speaking of the storyboat, focused on the kind of onboarding and for us, the KYB process. So everything from when someone might sign up to request access to the product, through the touch points that we'll have in something like a KYB or a know your business process, and then also getting into the platform for the first time. And there's a couple things that kind of go into that. So we have, in this case, kind of set up the right technology stack to be able to service this very quickly and make a faster turnaround of these decisions. We staff it very differently than I think some historical providers. We're very cognizant of what we request from the customer to ensure that we have what we need, but we don't have more than that. And then also importantly, we work with our downstream partners to make sure that they're also collecting the right information on these customers, but also are holding themselves to their own SLAs, just like we might internally. And so ultimately, that means that we can turn around these onboarding processes in days as opposed to months. But that was something that was very intentional from day one and kind of set up that way, largely because of the learnings we had at Pat and our past employers. But that's a great example of saying this is typically maybe a red for a lot of folks in the process. If we were to kind of just sit down and map out a more ideal experience, like how do we get it something that is going to be a green? That's one area we focus quite a bit on. Another one to extend through that is going to be around both kind of something like your first user experience. So you're often called the new user experience when you first come into the product. What does that look and feel like? As well as folks that are kind of often known crypto, things like transactions and reporting is an area that historically most people would have struggled with getting access to the right data, the right information, being able to access it. And that's an area we kind of invested a lot in day one as well. So those are the types of areas we kind of think about, as well as things, something as simple as like payment rails, where someone might have access to something like SWIFT or SEPA if they're in the US, or if they're located overseas. Next, the Fedwire, like how do we make sure we have those right partners up front so that those experiences, when it comes time to make a transaction and you're working with a vendor and they're only going to accept SEPA, that you have a good experience and it's not something where you're stuck without the right support and functionality.
It's such a hard balance because to be that trusted brand that you're talking about, like an Anchorage or a Coinbase is, there is such a high bar for ensuring that what you're doing is above board and that the funds that are on the platform, the businesses that are on the platform are, doing things in a way that are legal and compliant. And typically that when you have such a high standard there, which I know you do, that often comes with that red experience. And historically, how have you felt, like how do you deal with that right now as a founder who's trying to build products that feel frictionless and feel beautiful and green, but also often being limited by some of the partners or external parties? Like I know that you guys, for example, use Persona on the, KYC and identity side. Like, can you speak to some partners or just the current moment of how you solve that and how you make that as frictionless as possible?
Yeah. So I'll maybe break this into a couple of categories. We can think about one as like the kind of software and the tooling and persona will fit in that bucket. There's the kind of the people and there's like the process. So when it comes to something like software, a good example will be onboarding. So we use a product, as you mentioned, Persona, to help us to collect a lot of that data. A lot of that data also has the ability for us to kind of run more advanced like logic and information screening on it so that we can kind of make faster decisions and easier decisions, everything from pulling out information from particular documents, for example. So a person doesn't need to like sift through it individually. Also within the product, for example, I'll take another example of transaction screening, often termed called KYT. So we use another vendor called TRM Labs under the hood to ensure that all the transactions are being screened for two things. They're being screened to ensure they're not being kind of received or sent from any OFAC sanctioned entity, but they're also given a compliance score that allows us to kind of evaluate them more thoroughly. And a lot of that happens under the hood. And so a lot of the discussion around these kind of tooling pieces is what is the customer ready to provide versus what can we gather from other data sources and information. If you provide to me a 12 pieces of information about a business, there's generally a couple more that I can derive my own that I don't need to ask you for. If I have something like transaction monitoring, there's definitely areas where I can do a bunch of work so that you're only exposed to the pieces of information when you need to or when it's worth it. So for example, being able to expose something's a high risk transaction, but not asking you to provide a bunch of data per transaction. So obscuring that away when it makes sense, but also highlighting it when it doesn't. The other thing around, aside from tooling, is just people. So making sure that you are really hiring and investing in the right people to kind of staff those things, because you know that it takes a certain caliber and skill set. And so in many cases, it's hiring more senior folks in those roles that are able to basically move more unilaterally, move faster, and make better decisions because they spent so much time in that space. And lastly, on processes, this is just us being able to sit back as a business and in many ways define the right, whether it's KYB or transaction or something else, like processes that make the most sense for us as a business, where we can be compliant, we can work with the right vendors, that our downstream vendors have what they need, we have what we need from them. But ideally, from a user experience, you're getting the more ideal version. Now, that means that there's always going to be things like KYB and some time involved, but our goal is to make that kind of the best possible version of that thing, as opposed to trying to eliminate it completely.
Yeah, it seems like you've done a great job at that. Just, candid feedback. I was really impressed, went through that yesterday, and it felt actually unexpectedly delightful. It didn't feel as bad as you'd expect. It felt actually like what you would expect for a front end user fintech. Like if I'm just a trader or connecting my Plaid account to my Coinbase, like it felt almost in that vein as good as a user would feel, which is awesome. And kudos to you for figuring out how to piece those things together thoughtfully. I know it's not easy. I know we're kind of in the weeds a little bit with the vendors and partners of Dakota, but to take a step back, I'd love to, I think for this show, and something I really care about as we're early in the phases of it, is to be a voice for this industry, specifically with stablecoins, on-chain money, tokenized assets, and make that something that's really easily digestible for someone who's not, maybe hasn't been working in this space for years or is obsessed with this technology, but someone who might be working in the traditional side of finance or software and looking to enter this for the first time. So if we were to take a step back and speak to that person or talk about Dakota in that way to someone who's less familiar with the world of on-chain money, how would you describe it? And maybe to ask this in a way that's more fun, if when you're going to Thanksgiving dinner in the next few weeks, how are you, or when you're talking to your family members who know nothing about this stuff, how do you describe the core value add of Dakota and what you're building?
Yeah. So it's a great question, and it is going to come up here in a few weeks with the holidays. But one of the most important things, whether it's communicating with family or with customers, is really about the kind of core benefits. I think within crypto, it's easy for us to get excited, talk about the technology, talk about how things work. But really, at the end of the day, what we're here to do is kind of solve problems or provide folks with these key benefits. And so, for example, one difference that we have at Dakota that is different than your standard, neobank or traditional account is that you'll be able to inherit a lot of these benefits that you get from the crypto industry without having to kind of understand it. So one of those is that you retain ownership of your own assets. So in a traditional account, you are making a deposit. Those assets are going onto the balance sheet of the bank, whether that's the provider that you're facing or downstream vendor. Very different with Dakota. So I'll talk about something about retaining ownership. And a lot of folks these days will immediately see the value of retaining ownership of their own assets, especially what's happened in the industry over the last couple of years here. You can also talk about things like faster payments. and say, hey, you may need to make cross-border payments. There's a whole bunch of reasons why under the hood, but at the end of the day, what that means is that your wire, as opposed to taking 5 days to go from the US to Europe, can take 1 day, or even within a few hours at times. We'll talk about things like options to better yield options for folks who are have a treasury, especially a corporate treasury that they're investing in. And so we'll kind of pivot around these ideas about, whether it's from yield or faster payments or kind of retaining ownership, or even things like transparency and being able to verify the assets where they say they are. We've seen a number of issues in the traditional system where assets are kind of misledgered, or in some ways there's dispute around where they actually reside. And so for a customer or a family member, oftentimes understanding that they own the assets and those assets are transparent and verifiable is something that immediately resonates, even if they're not really kind of familiar with how the blockchain works or how crypto might work under the hood. And that just becomes the kind of facilitating infrastructure or technology that allows us to make those claims and provide those benefits to the user.
Tell us about those users right now. I mean, you guys came out of stealth over the summer. It sounds like you've been onboarding a lot of businesses pretty quickly. I know we've talked about the core buckets on the go-to-market side of like foundations, VC-backed startups, institutions. Talk a little bit about those groups and the things specifically that you're finding, maybe uniquely about them, that they're finding the most value in with Dakota, in those core values that you mentioned. Like, I would be curious, especially for a business who's considering signing up for the platform, or maybe just now hearing about Dakota for the first time. What are the key values that you see in like a segment by segment basis on what you're building?
Yeah. So we will break it down into those 3 segments. So we have, crypto startups. These are oftentimes, venture-backed startups. We also see an increasing number of startups outside of crypto. So think of things like fintechs and the like. We have crypto foundations as another segment, and then institutions as our third. Institution examples will be folks like hedge funds, OTC desks, market makers, traders of some kind will sit in that bucket. If I start with the crypto startups, oftentimes we are seen as someone who's a way to kind of diversify their treasury management stack. So what that means is they might have a traditional bank account. They might have an account at Mercury or Chase if you're here in the US, but they'll use Dakota alongside those accounts. And the reason that they're going to do that is for a lot of the value propositions that we just kind of explained, which is the idea that, hey, this account, I know no matter what, that I retain and own these assets. I'm going to be able to move them around much faster. So it comes time to pay vendors and have better access to yield for things like treasury management. So if I have an account that's at Chase or Mercury, I can be rest assured that these assets over here, if anything were to happen, I will always have and be able to make payroll and do things along those lines. I also can take advantage of any kind of crypto native features that I might need to, whether that's relying on the underlying segregated addresses in the account, staking, lending out on DeFi, or things along those lines. For something like a crypto foundation, we're much more of a bank replacement. And so there are parts of the world, including Cayman and BVI, where it is much harder to get access to bank accounts. They have really high minimums, something like 500K or even more. They are incredibly difficult to stand up and take a long time. And so they might come to us and say, hey, I'm going to use you as my sole bank account. And so for them, very much an exercise in just having a Dakota account, using that to accept US dollars, send out US dollars, and some of those crypto properties may or may not come handy depending on the business, whether they have a native token or something along those lines. And then institutions will be a little bit different. Institutions will use us as an account, but they're also oftentimes going to have much higher kind of transaction volume. And so they'll see that whether they are something of a trader where they're kind of bringing in, or an OTC desk, bringing in dollars and sending out crypto, or the reverse, they'll have a very specific workflow. And that workflow will be Dakota, and potentially Dakota along other assets or other tools as well, to fulfill a core part of the business, whether that's making a trade or it's being able to perform desk-type functionality. That's really where we see that group getting the most value. And so inherently, they're using that for both the kind of banking rails to support them as an institution, but also to support a crypto-specific workflow that's core to the business.
So if I were to summarize this, really well said. So if I were to summarize this, you have 3 buckets. The crypto startups, what they're caring about with Dakota is diversification of their banking counterparty, speed of transactions, and retaining ownership of the account instead of, relying on the counterparty of a bank and the liability that might be. Foundations, replacing the bank or just getting access, like actually getting access to and I know it sounds like that's probably the core pain, like just being able to participate in this to begin with. It's like without Dakota, it sounds like you're sort of on the sidelines there for that group. And then for institutions, more of an embedded, potentially like infrastructure play where we need to get access to banking rails globally. We're going in and out of crypto and on-ramping and off-ramping, payouts and collections. When you think about these three groups and how you're thinking about the future and where you want to steer the ship, which group, and if you have an opinion here, I'd be curious, which group seems like the most interesting or commercially exciting for you as the founder that you want to drill down deeper on the go-to-market side?
Yeah. For us, I think a lot of things that we see that are probably the most exciting is the ability for Dakota to effectively, in many ways, like export the U.S. bank account. So commonly it's heard that, stablecoins export the U.S. dollar, and you get a lot of value within crypto, within the stablecoins domestically, but really it's about access to the dollar outside of the U.S., where we've seen a lot of adoption and a lot of interest. And while Dakota serves customers in the U.S., we also are globally available on day one, and about 70% of our customers are international. And so the thing that's exciting is that when you have a globally accessible bank account, being able to effectively export that account type, be able to offer people a US dollar denominated account from anywhere in the world is an incredibly compelling world, and the one that we want to live in. So that's probably the number one thing that we're really pursuing. And that ranges from being able to serve, startups that are looking for access to a neobank type experience that they can't get access to one, to foundations or other industries that have a hard time getting an account in their own right, as well as institutions that are looking for something that oftentimes is a little bit more sophisticated in terms of how they move money around, how they manage their treasury, how they face their customers. And one example there is that by having this global account, all of our institutional customers are starting to bring on their customers to the platform because what they've realized is that there is effectively a built-in settlement network within Dakota, which as these things reside in the blockchain, that underlying blockchain is the kind of global instant free network. But for dealing with large volumes, this becomes a kind of replacement of some of the traditional networks that have been built and have since subsided. But it allows us to rely on the blockchain and say, within Dakota, you can move money between your vendors, your partners, your customers at scale, global, instant, and free.
Let's dive into that a little bit, specifically talking about where stablecoins as a technology come into play there. When you think about, and maybe we can do it in this way, like what would the traditional, for that institutional customer to engage with their customer on their end, what would traditionally be painful there, or traditionally what would they have to go through, timing, cost? What's the current setup there, and what would the alternative be with Dakota if both sides of that transaction were on chain and doing things with stablecoins?
So if you think about a lot of these institutional customers, especially within crypto, these are folks that have entities that might be in a different geographic location than their customers that are vendors. And so you have an institution that might be based in Europe that is facing someone in Asia, or someone that is going to be based in Dubai that has a vendor or a partner here in the United States. And so a lot of
and
these
this could be a business. This could be a business like. Give us an example of a business like a B2B software vendor, or what do you see there?
Yeah. So on the institutional side, we see a lot of folks that are going to operate like hedge funds that have a entity or even often several entities located throughout the U.S. and they'll have their own downstream suppliers or partners or even LPs on the other side that are kind of investing in those funds. The same we might go for something like an OTC desk. That's going to facilitate transfer between two parties, and those parties might be geographically dispersed as well. And so one part is just having each of these different entities will have their own, oftentimes, kind of bank account or financial services associated with that entity. And so taking a OTC desk as an example, they'll have one. Their counterparty also may have one, and those will be inherently located in different geographies. And so what that means is that those banks now need to be able to make payments to each other for those services. And so that can take oftentimes, depending on where they're located, 3 to 5 days or longer, just because depending on how these nodes are set up and how these bank networks work, it might have to go through 2, 3 or more correspondent banks in the middle before it goes from bank A and gets to bank B. And so those oftentimes associate things like high cost. The average transaction fee for something like cross-border payments these days is around 5 to 6%. You're looking at 3 to 5 business days for these cross-border payments as well. And so it's incredibly expensive and timely to be able to do something as simple as pay a supplier or pay a vendor that's located in a different geographic region, which happens to be the case for a lot of institutional customers. Now, if you think about Dakota,
5-6% for an LP who's, I mean, these are not like, you're not buying a coffee here. These are like 6-7 figure transactions, and 5 or 6% is like a massive just cost to doing business there, I'd
Yeah,
imagine.
it's a huge cost to doing business. It's also incredibly time intensive. We talk about things like 3 to 5 days. There's not a lot of visibility along the kind of path of the transaction. And so there's a lot of issues with how we kind of set it up historically in the traditional financial system in this regard. And as we all know, these are only available kind of on the typical banking hours, let's call it. So there's, evenings and weekends. There's no transactions that are being processed. And so you have these limitations that have been set up with this kind of traditional rails. And a lot of it because this is old technology. Think of something like ACH. ACH was developed in 1972 and hasn't really changed since then. So we're coming on over 50 years of technology, and we've just moved much faster, become much more efficient, and made a lot of progress since 1972. And so if you take this and kind of port it over to something like Dakota, if you have both the hedge fund, let's call it a supplier, that has an account on Dakota, they'll have their assets that once they've deposited into their accounts are now residing as these stablecoins that are on the blockchain. And so that blockchain then serves as that network. So within Dakota, they can find each other's address or account, and they can directly send that stablecoin on a layer 2 in Ethereum from one account to the other. And so that's going to look like something that is going to be near immediate. We're talking about the kind of blockchain settlement time. So maybe that's a minute, give or take. It's going to be free. We cover the cost of gas for these transactions because oftentimes they're a penny or give or take a couple pennies. And it's global because the system itself, the blockchain underlying system is global. And so all of a sudden you took something that took 3 to 5 days, might cost you, 5 or 6% of the actual transaction size and had geographic limitations, and you're able to move it on chain in a way where people did not have to kind of get up and running and learn a lot about crypto. There was no private key management that they needed to pick up. There's no wallet they need to bring to the table, anything like that. All they have to do is log into their Dakota account and make a simple transfer.
So tell me, this sounds great. Obviously I'm on board here. What are you finding is the barrier to entry to this being more widely adopted more quickly? What objections are you hearing from customers? What barriers might you be running into? I know personally I'm wondering around the idea of when I was at Coinbase, the idea of holding keys or managing wallets in a non-custodial way isn't always something that a lot of businesses like the idea of doing. I'm curious how what you're hearing as key objections to onboarding to something like Dakota and how you handle those typically.
I think one of the bigger ones it's going to be around what I'll describe as like an education gap, which is folks that are kind of people who are crypto native, understand how stablecoins work and the value they can bring, are usually pretty straightforward in being able to say, I understand the offering and it's either a good fit for me or it's not. As we kind of get into other industries, there's been a number of areas where industries such as import-export is very excited, very keen to learn, and wants to kind of really lean into the education if they're not maybe someone who has that crypto expertise or comes to the table with it. There are other folks in other industries that we've talked to where there's just a larger gap when it comes to education around what's happening. And closing that gap and providing that trust and that confidence, kind of going back to that conversation around brands, is like a key part of Dakota, what we want to do. But that is one of the areas I'd say, and probably the largest that we run into, is working with teams and making sure that we can close that educational gap around what's happening, why it works, and why the value is derived, how we can do what we do in many ways. So that's probably the biggest one. Non-custodial does come up at times. I'd say for particular businesses, it's been generally a value add, though for institutions, it's a mix. It really kind of depends on their location, their regulatory status, and things like that. As we know, particularly large institutions located in the U.S. that need some kind of qualified custodian is a good example of a market that we don't serve today, and for a lot of reasons, but they might need something that has a slight kind of infrastructure or setup to really get value out of it. But those are the types of objections you might see, is whether someone needs a kind of structurally different makeup, such as a qualified custodian or QC, or I'd say the other one would be around kind of closing this educational gap for folks that don't have much experience with stablecoins or crypto in general.
Okay. One area I wanted to dive into a little bit, and then we can close with some just rapid fire fun questions, is this idea of the asset, like the stablecoin itself being a yield generating asset and something that just the currency and the means of exchange can actually turn into a revenue driver for companies and platforms like Dakota and Dakota's customers. Personally, it's one of the things that I'm most interested in right now, and there comes with a lot of nuance there and a lot of incredible upside if you do it well, but also I'm imagining a lot of key considerations and concerns potentially as a founder who's operating within a landscape from a regulatory standpoint that's still fairly uncertain. So I know you guys have worked with some key partners to issue and create a Dakota-backed stablecoin. Maybe help, again, going back to the Thanksgiving dinner table, like how are you doing that, and what does that mean, and why have you chosen to create a stablecoin that Dakota is owning and managing in a sense? And let's just dive into that, because I think that for me is a really interesting thing that you guys have chosen to do.
Yeah. So when you make a deposit into Dakota, it's automatically converted to this stablecoin that we're describing. And the stablecoin is one that we have as an on-platform stablecoin. So what that means is very different than your standard stablecoin, is that it is not exchange traded. It doesn't leave the Dakota platform in any way. It's issued by Bridge, which most people will have heard in the news in the last couple of weeks here with the acquisition by Stripe. But they are the issuer. If you think about something like a Circle and Coinbase relationship, they are Circle and we are Coinbase in this example. So they're actually responsible for issuing the stablecoin. The stablecoin itself is held through a fully backed reserves of US Treasuries. One of the reasons that we relied on our own stablecoin was the fact that we could direct and guarantee that those reserves are in US Treasuries, not in a kind of Treasuries and other things type category, which you see with a lot of larger stablecoins. So that one area was being able to make that promise to the customer that says everything on the platform is fully backed by US Treasuries. The second is that you have the ability with that stablecoin to say this is not exchange traded. So a lot of the traditional risks that you have with a stablecoin go away. So most notably, the idea of a depegging can't really happen without it being exchange traded. So it's a closed network stablecoin. If you want to send it out, it's either sent out as a US dollar or you convert it within the platform to something like USDC or USDT, which then can be sent out to the broader crypto ecosystem. And so for us, that was a couple of the reasons that we wanted to do it for the customer promise. Say, hey, we want to guarantee that you can mitigate the risk of things like depegging by not having exchange traded. We want to be able to say with confidence that it's fully backed by US Treasuries and direct the reserves to do that. And then lastly, part of the motivation is from Dakota, is as part of our business model. So we earn interest income off of the US Treasuries for the assets that are on the platform. And then we as a company have the ability to issue rewards to folks that are holding the platform as well, which we do for folks that have a balance on Dakota, but also retain some of that to fund the business. And it looks much more like a traditional kind of banking model where you have a borrow-lend relationship. But in this case, you are facing the US government as the person you're lending to. So we thought that all those reasons kind of made sense for us to kind of have this stablecoin that is issued within Dakota, stays within Dakota, adds value to the customer, adds value to the business, is something that we are very excited about and plan to grow in the future.
And with that being a core monetization strategy that you've had, which I think is really, really amazing, does that replace or mitigate the typical Coinbase custody or typical custody AUC, assets under custody model where you're being charged based on, which I've always found very interesting as like a pricing mechanism. It's like the more that I put on I know there's probably tiering as you go up, but are you doing any sort of AUC related fees that are also in addition to that, or is it just the yield?
Yeah, so we just take the yield. If you have assets on the platform, there's no kind of storage fees for those assets, and even any kind of transfer fees that are associated with it all go to zero. And so for customers that have a balance on Dakota, we will earn our revenue through the interest income. And so in many ways, if you think about the structure of the business, we are doing things like conversions from dollars to stable coins and back again. And there's inherently work in all these pieces. And if we didn't have something like this, we would need to charge in other ways, such as transfer fees, you come and see, or AUC, as you mentioned. And so one other benefit of the stablecoin is that we can really consolidate much of our revenue and say, hey, revenue is really going to be derived from the assets, from the US Treasuries that back the assets more accurately. And so we don't need to charge for AUC or for transfer fees. And that always has felt like a better customer experience, but also a better business model.
Something you said before that I just want to double click on is you've chosen to have this stablecoin be something that isn't exchange traded. It's something that's only within your ecosystem. Is that just due to I know you mentioned like the depegging. Are there specific, in addition to that, other regulatory requirements I'm imagining that come with that because it's not, I know there's a ton of stuff around like even NFTs or points or ledgers that are just in a closed ecosystem. Is that sort of how you think about it too? It's like because it's closed, you're actually guarded in a sense from a regulatory sense?
Feels like for having a closed versus a kind of open stablecoin, the motivations are just very different. And so if you think about something where a stablecoin is going to be exchange traded out there, really what the kind of most important thing is going to be things like liquidity. So being able to say, hey, there's just a lot of it, which always felt just like a decoupling of what we should really be pursuing and doing. Our goal should not be to have the most liquid stablecoin in the world across the entire kind of crypto ecosystem. It should, going back to kind of fulfilling on those like key benefits of crypto, it should be a facilitator of the actual value proposition to the benefits that we want as a company. So being able to say things like they are fully backed by US Treasuries, that is transparent, that's verifiable, those were all pieces that are really important to us, but didn't require us to have an exchange traded asset. And so for that reason, it allowed us to kind of scope it to what was actually the problem to be solved in this case, or the job that we want to be done if you want to use some of those frameworks, and does have, I think, in many cases, an added benefit on the regulatory on top of that says, okay, there's also a little more clarity in terms of what this can be versus someone that's going to have something that is exchange traded. But for us, I think the primary driver was really around being, what is the kind of customer experience? What does the business need? And kind of orienting around that.
Got it. Question on Bridge. I know you mentioned the acquisition, which in my view, even for this podcast and this business model for me, has been also a sort of a cultivator of wanting to do this. I feel like there's been a massive rising tide since Stripe's acquisition of Bridge around putting a huge stamp of approval on what we're talking about right now. I know you've said that you've known Zach for quite some time. What was it like for you when you heard that news? And what's your feedback or take on that news that just came out a few weeks back?
Yeah. I think it's incredibly exciting. Very pumped for Zach and the team. Very well deserved. They've done a phenomenal job over the last 2.5+ years here building Bridge in terms of hiring the right people, building the product, bringing it up to market. I think more broadly, it has a really interesting position around kind of within crypto itself. I think a lot of people get excited about this as being a catalyst for further MMA or MA. I think that is true to a certain extent. I will draw, I think, a more kind of narrow, view around how that might work. I think particularly if you think of someone like Stripe that has a lot of strategic importance around moving money globally, around kind of adopting new technology around that it made a lot of sense for them to pay and acquire a team of this caliber and be able to say this solves a real problem, not only for us as a company, because we need to move money around, we need to kind of be on the forefront of new technology, much in the way that you take a Facebook and an Instagram, for example, and be able to get all that in one package at a time that I think is incredibly important. We're seeing this kind of real world adoption of things like stablecoins happening at a trajectory still over the last few years that people expect to continue to happen, if not even more so for the next few. And so it just made a lot of sense for them. I think when you extend that to financial services more broadly, you'll see further kind of MMA activity and things along those lines, because they'll have a lot of the same kind of strategic imperative, as well as just the kind of, quite frankly, the cost imperative to say, I really can drive down the cost of my business if I'm moving money globally significantly through this infrastructure, these tooling, these applications. Now, I'm not so sure that's going to extend to kind of crypto more broadly in terms of other facets or segments of the industry, but it does, at least in terms of fintech, have a very, I think, a potential pivotal moment for us as an industry, as well as just the stamp that's something that brings to us as a whole.
Yeah, I totally agree. Okay, I know we're wrapping up here a little bit. Let's do some rapid fire. These will be quick hit, fun, random Drew Rogers questions. Okay, so if crypto did not exist, what problem would you want to be working on in the world to solve?
I always felt like my time at Airbnb was a good example of something where like it was really nice to be able to facilitate people having amazing experiences. And so I think that if there was no crypto and I had to kind of step away from, I'll call it financial services more broadly, then I would love to be something that's more experience-based. I think Airbnb does a great job of doing that at a technology level, but also just being able to do something that bring people out onto kind of unique experience, whether that's long motorcycle trips or big hikes and things like that, that I think you get a lot of value out of as an individual, but also as someone who can bring that to others would be up there at the top of the list for me.
Okay. We are, I'm looking at the date. We are 2-ish days after the election decision. What's one, as we're recording this, what is one word to describe how you're feeling post-election?
Bullish.
Bullish. Love it. Okay. Favorite stablecoin startup or founder team, like early team that is not Dakota? Someone that you know, are looking at or tracking that you really admire or look up to right now?
Yeah. I think there's a lot of people that are building amazing things right now. We talked about Bridge and Zach earlier. I would add maybe one more to that list that when I think about the stuff that Mika, the Parallax team are doing, it's incredibly interesting and powerful around payments as well. But there's, quite frankly, just dozens of teams out there, and feel very lucky to be working alongside folks in this space. In this particular cohort in time, it really feels like over the last 2 years, a lot has been built, but there's a lot more to be built as well.
We got to get them on then. Let's get the Parallax team on here. Okay, last or two more. What boss or leader has had the biggest impact on you personally throughout your earlier career? Anyone come to mind there to shout out?
Yeah, I mean, there's one of those examples is going to be, there's a lot of amazing people you got to work with through working at some of these companies. Short answer is there's probably too many to state, but one that kind of comes to mind was I had a creative director at Square. His name was Paco Vidoli, who was an amazing lead of our brand team there and taught me a lot about everything from people management to kind of directing teams and being able to carve out a space at a unique style. And that was something that Square, I think, was really particularly good at. It's something I took a lot away from.
Okay. Paco, that name sounds so familiar. I feel like he had a very prominent brand at Square. Like I remember that name being thrown. Is he still there?
I don't think so. I think he's since left, but I haven't had a chance to stay in touch with him, unfortunately. But absolutely a fantastic design leader.
Okay, last one. What is the biggest learning due to failure that you've had as a leader or, business owner in the journey of, your career? What's something that sticks out as like a key learning due to
When I look back on a lot of my failures, I think that they're kind of oriented around this idea of a misunderstanding of what people actually wanted. And I think it was like very easy for us to tell ourselves these stories, especially for folks that have a background in product like myself, where you kind of think you know what someone might want, or you got a chance to talk to a few people and you try to derive a much larger meaning out of those few conversations. And therefore you start kind of going into the work and building and getting the things that you might be personally excited about or personally trying to solve. But a lot of those failures, whether it's some of these kind of projects earlier on I was involved in, or even just like launches that we had, a feature launch at a larger company, I would say 9 times out of 10, it was because we didn't go back and have the true understanding of the customer and what they really wanted and the problem they needed to solve. And so that's something that we kind of take forward with us at Dakota and myself personally to say, let's make sure that we are not just talking to a few people, that we do have a full understanding of what it is, that we're really going through a lot of those kind of traditional product exercises, not just of having things like research calls, but really getting down to the root problem to see what they are actually trying to achieve and making sure that, we ourselves aren't holding anything too sacred, that we have a idea and a product strategy and where we're headed. I think that's important, but also we are open to kind of hearing unfiltered what is the things that our customers are telling us as well. That's probably the biggest thing I've had, and that's been unfortunately learned the hard way for a number of years.
Yeah, well, that's the best way to learn, man. It seems like you guys are doing that. I'm really excited for Dakota. I'm excited to use it personally for our treasury, for Stable Studios. And yeah, thank you again for being on. I know this was a lengthy chat, and it's been fun to dive into some of the details of the business. Any final thoughts or things you want to leave the audience with before we go?
I appreciate you having me on. This has been great. I've always loved the conversation with you. I said one final thought is that I think the next year is going to be a really interesting time for crypto. I think we have a lot of great building that has happened in what most people would describe as a bear market that people are coming to market these days with. And I'm really excited to see those products flourish, both at the infrastructure level as well as the application level. And so as we go forward, I guess my parting thought is just that it's going to be a really fun ride for the next couple of years.
It's going to be a great ride. And you're right on the forefront of it, man. So thanks for all the work you're doing.